Reuters, Wall Street was set to open little changed on Friday, but is on course to end with strong weekly gains, cementing its pullback from last week. A euro trademark sell-off as investors shrug off inflation fears and focus on growth in the economy and corporate profits. By 8:44 a.m. ET, Dow E-minis 1 YMC1 had lost 10 points, S&P 500 E-minis ESC1 were down 1.25 points and the Nasdaq 100 E-minis NQC1 fell 12.5 points. The benchmark S&P 500 index's SPX 4.3% gain since Monday has put it on track for its best week since January 2013. Its pullback from last week's sell-off has been accompanied by low volatility, encouraging economic data and corporate reports. The Dow Jones Industrial Average (DJI) is set for its best week since November 2016, with a 4.2% gains, while the Nasdaq Composites (IXIC) 5.6% gain since Monday has set it on course for its strongest week since December 2011. A Euro-OE long-term uptrend in the market is viable given how strong economic fundamentals and earnings are. What a Euro trademark SA caused a rebound from the correction is just that we Euro trademark simply back on that trend. A Euro, said Randy Frederick, Vice President of Trading and Derivatives for Charles Schwab in Austin, Texas. Shares of Coca-Cola, KON, rose 2.3% in pre-market trading after the soda maker a Euro trademark's cost-saving initiatives helped its beat fourth-quarter profit estimates. Deere & Co., DEN, rose 0.94% after the tractor maker reported a 23% jump in quarterly revenue as its key markets improved. Economic data also painted a healthy picture. Home building increased to more than a one-year high in January, boosted by a rebound in the construction of single-family housing units. Housing starts jumped 9.7% to a seasonally adjusted annual rate of 1.326 million units, the highest level since October 2016, the Commerce Department said. Besides strong quarterly earnings, investor sentiment has also got a boost from expectations that more growth is still to come due to newly implemented corporate tax cuts and plans to increase infrastructure spending. Nearly 77% of the S&P 500 companies that have reported fourth-quarter results so far have topped earnings estimate, above the 72% average beat rate of the past 4 quarters. Many companies have boosted their forecasts and analysts now expect S&P 500 companies to increase their earnings per share in 2018 by 18.9%, according to Thomson Reuters I/B/E/S. After falling by more than 10% from their record highs on January 26 on concerns about rising borrowing costs due to a pickup in inflation, the S&P has gained 5.8% since last Friday. Some traders have said the market was also reassured by a decline in the CBOE Volatility Index. VIX, a measure of implied near-term volatility on the S&P 500, also known as Wall Street a Euro trademark SA Euro fear gauge a Euro. On Thursday, the VIX dropped below 20 points for the first time since hitting a 2.5-year high of 50.3 last week, while yields on the benchmark U.S. 10-year Treasury bonds hit a more than 4-year high of 2.9440%. But, the rising yields this week has not pressured stocks like they did last week. The 10-year yield slipped to 2.8822% on Friday.